Today is February 19th, 2008. The markets just wrapped up a very interesting day that saw three big things happen that I've got to talk about. First up, oil. Oil traded above $100 a barrel today for the second time in history. While we may see some pullbacks to lower levels in the near term, there is no doubt that crude is headed higher in the long term. What I'm saying is, if I had kids in middle school, I could buy oil right now and pay for their college with that money. It's that much of a sure thing. Any pullbacks on oil from here on out is a buying opportunity. Oil is going to go up for at least the next few years until a better alternative can be found. Now, as a note, I won't be posting this as an official pick since AbsoluteGains.com picks have a maximum time frame of 1 year. Big story number 2, the Dow. Today, the Dow Jones Industrial Average dropped 2 companies from its basket, Honeywell and Altria, while adding 2 more, Bank of America and Chevron. The reason this irks me is because this index, which is used to supposedly reflect overall market performance, can be manipulated so easily. The Dow Jones Industrial Average is by definition an index of 30 of the most widely held public companies. The number value we see that is shown by the Dow is a scaled average of the 30 member stocks' value. Now, what gets me is that when people push the idea of long-term investing, they often use the performance of the Dow as an illustration. They will show how leaving an initial investment in the Dow for X number of years results in a solid gain over the long term. What they neglect to show you is that the stocks making up that index change. That's right, when a company that is part of the index performs poorly, it's removed and replaced by a high flyer. So when you look at the performance of the Dow over the years, you're looking at how the best companies did, not all of them. Did you know that stocks actually tend to lose value over time? That's why of the original 12 stocks listed in the Dow Jones Industrial Average, only one, GE, is still there. That is why I am firmly against traditional long-term trading. People will say you should ride out all the bumps and the dips along the way, but the numbers just don't show it. Big story number 3, volatility. The market opened sharply higher today, only to give up all of its gains and close lower. After hitting session highs over 12,500, the Dow dropped 1.3% to close at 12,337. Variations on this theme have become incredibly common lately. Volatility is ridiculous right now and will continue to be for the next few months because of so much uncertainty. I have never witnessed such an irrational market as is happening right now. For example, at one point today, oil was up big, commodities traded much higher, and the equities markets were still trading higher in spite of bearish news. It makes no sense. Right now is not a good time to be a long-term investor. However, the crazy volatility creates a whole lot of opportunities for traders, and that's what I do. My next picks are on the way.
All content contained on and associated with AbsoluteGains.com is only an opinion.